All right, trade pros, good morning. Welcome to our morning market update for Tuesday, October the 1st. I'm going to turn around in 1 second. Just give me uno momento. It is Tuesday, October the 1st, and that means that today is the beginning of the last quarter of 2019. Isn't it crazy how fast time flies? Yesterday, we wrapped up the quarter in equity markets, and today we're opening up a new quarter. It's officially Q4, and we've started on some interesting developments overnight outside of the United States, outside of the American continent, and we'll talk about that in a second. First and foremost, equities are trading a little bit lower in Europe after Euro area inflation came out at 0.9% for September, slower than analyst expectations. So it's a disinflation, meaning that inflation is lower or weaker than expected. All right, core inflation excluding food and fuel prices. So if you took out those two products, the core number came out at 1%, which is stronger than the headline, which includes those for the first time since 2016. All right, so inflation's weaker, but it beat the headline still when you exclude food and energy prices. All right, there's also disappointing news in the manufacturing PMI data, which came out at 45.7 for the month. And there's a lot of fears in the market that these manufacturing numbers are not just a mid-cycle sort of news item, but could be something larger for a longer term, more indicative of downside in the manufacturing sector in Europe. All right, so data out of Europe wasn't very supportive of the rally. And then it gets even more fun. The biggest news came out of Japan overnight. And if you guys don't know this news item yet, well, this is why you're listening to the Morning Market Update. And this is going to be historically important. And I know a lot of people are missing this event. If you look at the news, very few people are covering what happened in Japan overnight. All right, something huge happened. The Japanese 10-year bonds, the JGBs, as they're called, Japanese government bonds, the 10 years got smashed. All right, they had the biggest one-day crash since August 2nd of 2016. Huge downside, triggered a lot of margin calls for debt holders or bond holders of Japan's bond portfolio. All right, the selling pushed the entire global bond market lower, and the selling spilled over into the USTs, the U.S. Treasury complex. That's down as well. All right, the problem with all that is that while bonds are going down, yield or interest rates are going up. All right, and it's very interesting. There's two reasons why this happened, and it's very interesting reasons indeed. Number one, on Monday, the Bank of Japan decided that they're going to slash their bond purchases in October, and it didn't really give the market too much time to disseminate that information and put it into their sentiment, right? They just said, hey, it's September 30th. Tomorrow we're going to start buying less bonds than before. We're going to cut our bond purchases. And the reason that the government's cutting bond purchases is because they want to remove stimulus. They don't want to be involved in the market, all right? The Bank of Japan has been involved in interest rate and market conditions and open market operations since the middle 90s, early 90s, in fact, right? It's been a long period of time, and Bank of Japan just wants to start cutting purchases to remove themselves from the market while we still have a little bit of upside, economic expansion. All right, so Bank of Japan announced that they might stop buying 25-year bonds plus outright, not even purchase them on the open market. All right, and it's a big shift in psychology, and investors suddenly stop buying bonds. They're like, look, if the government's not buying bonds, all right, and there's no support mechanism to prop up the price of the bond market, why am I buying them? All right. And then you could imagine how that spiraled even more. They're saying, well, if I'm not going to buy them and I'm already long, why don't I sell some? Right. So no buyers always equates to more selling. Bond prices collapsed. It started in Japan, and then it spread globally as well on a contagion basis. All right. Lastly, the second issue I was going to tell you about in Japan that happened overnight is a few hours later, after that announcement from Bank of Japan, there was a 10-year JGB auction, meaning that they were selling bonds. All right, Bank of Japan, or rather the Japanese government, was selling 10-year treasury bonds, and it drew a bid to cover ratio of just 3.42, which is the lowest since 2016. Clearly, there isn't demand for these bonds. As we just learned a couple hours before, Bank of Japan stopped buying them. Bank of Japan stopped buying them. Investors stopped buying them. All right. And here's the big question. This is why I said it's historic. This is the question that I think a lot of investors are wondering at their trading desk this morning. What would it look like if the global market lost the bigger buyer of bonds, or the biggest buyers of bonds, central banks? What would happen if central banks stopped purchasing bonds to support the market? All right. What would happen if they just decided to not intervene in the markets? Well, I think we saw what would happen. Bond prices would crash, yields would increase, which means borrowing costs would skyrocket. Borrowing costs would translate to a lot of loss of revenue and income on a corporate level, all right, which would lead to layoffs. And the short end of it is higher borrowing costs will trickle down to recessionary pressure in the short, medium, and long term. And that's why it's a little bit of a head scratcher for investors. This is huge. Bank of Japan was one of the first banks to do these big rounds of stimulus. And now they're saying we're not going to buy bonds anymore. We're going to slash it. And the market panicked a little bit and dumped the bonds. Yield rates are up big this morning. All right. Now you know. Now you're up to speed of what's causing this. In the markets today, Japan's up 0.6%. Hong Kong and China are closed in celebration of their 70th birthday from the Communist Party ruling. India's down 0.1% or 1% rather. In Europe, at midday, London's down 0.1%. Paris is down 0.1%, and so is Frankfurt. So there's some small selling pressure in Europe out of the latest manufacturing data and Eurozone inflation. In the United States, in the United States, Dow, S&P, and NASDAQ are up about 0.2%, kind of hovering around their previous day close. Lack of volatility and excitement in the last 24 hours in the markets. We're consolidating, and that's okay. We've dropped a lot. Consolidation is good news for the buyers. At least they're holding off the sell pressure. All right, this morning we have crude oil that's up 1.29%. There was some production news that I'll let Stephen talk about. I don't want to steal his thunder this morning. Pushing the oil market higher. Gold prices are down 0.2%. We traded as low on gold as 14.65 even. All right, huge dump. Victoria and I were talking about it on Sunday, and I think our target was 14.75. We got there and below there on gold, and there's a lot of sell pressure. And I told you yesterday I was seeing a dump in gold. On the weekend, I told guys on our Sunday Market Analysis Live subscription for all of our members, anyone who subscribes to the TRADEPRO product has a Market Analysis Live webinar every Sunday. We prepared you saying, look, I'm expecting some downside in gold. All right, and it could happen overnight, and it did. All right, gold is weak. Careful. Bitcoin's up 4%, still under 10,000, 8,300 at the moment. 10-year Treasury yield, like I told you, yields are up across the curve, up 7 basis points, and we have a few Fed speakers at 8:50. Fed's Clarita started speaking. 8:55 we'll have Red Book chain store sales, or we already did have it. 9:15 coming up in a few minutes. We have Fed's Bullard speaking. All right, 9:30 Fed's Bowman's going to speak. 9:45 we have PMI manufacturing index out of the United States. 10 a.m. we have ISM manufacturing index and construction spending as well. So we got a couple economic reports on the board for the day, and we're going to monitor those. But overall, I'm seeing equities trying to be bullish, but each time they try to go bullish, they get sold back down. But at the moment, on a microstructure, we're forming higher highs, higher lows. I still anticipate off the open a morning weakness, a little bit of a sell-off, and then that could be a good long opportunity if we get down to key support structure. Where that is, I'll tell you in a moment. First, I'm going to send it over to Stephen to talk about oil because the oil market's open. We see some of the comments on YouTube here. You're welcome, Slim Jim. I got your back. You keep showing up. We'll keep doing these. Saludos, William from Montenegro. Morning, George. Morning, Stephen H. William, Angel, Craig. Angel, that's a nice name. Maybe just a YouTube moniker. Maybe it's a real name. If it is, awesome. Hope you guys enjoy this morning market update. Take care, manage your risk, trade pro. We'll see you tomorrow morning. Got to open up the trading room. Sending it over to my man in the ATL to cover oil. So let's send it over to Stephen. And YouTube, I'll see you tomorrow. Take care. Have a great day. Join us in the trading room and see what we do on a daily basis because we do it really well. Goodbye and take care. Steve.